The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 31st, folks. Happy New Year's Eve to you. This is the magnificent Monday edition of today's opening bell on the Trader's Edge. Thanks so much for joining me, folks. I absolutely love being here with you, and I treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. So let's go take a look at one of our tools, and we'll get to these markets here, bouncing around here this morning. This tool, this is perfect for New Year's Eve. This is called Progress. Progress requires change. You know, a few weeks ago, we talked about how with every ending, there is a new beginning. And therefore, progress, folks, progress requires change. And as each of us celebrate the new year, and I want you to make sure that you have a safe and happy new year out there. If you are drinking, walk or take a cab. But no drinking and driving tonight. And so as each of us celebrate, you know, the new year, out with 2012, in with 2013, I ask that you look at the universe from this viewpoint, the viewpoint that everything is alive and everything is growing. Everything, folks, is in a joyous motion out there. New combinations, they appear in front of us all of the time. New opportunities, and people touch our soul on a continuous basis out there. New opportunities, they spring up around us each and every moment. Certainly we see that here in the trading environment, and we're going to take a look at that, you know, momentarily. And if you are an adventurer, folks, then I say the time is now to begin that next new adventure. Even if you're not an adventurer, I think you should be. I think you should be willing to explore your next new beginning out there. Time does not stand still. And there is one certainty in life, folks, and that is this. Change is the one constant that there is in life. When a seed falls, you know, or a seed is planted in the darkness of the earth, the seed's outer shell must break in order for new life to be able to emerge. Much like with you, much like with me, we can and should learn from this seed. Breaking the shell, it can be painful, no doubt about it. But as we move from the known to the unknown, there is so much potential that is out there. We may lose something, no question about it. We may lose something, but folks, what we will gain in the way of growth, well, that's just around the corner, and it's excitement out there. Life offers unexplainable experiences that may not always make rational sense. I got an example for you. New Year's Eve, 2000. In 1999, I created a new product that was unveiled at Epcot Center in 1999. I invested $500,000 in this product before I actually sold one at retail. It was a process that I had created. It was invented back in the 1970s, back in Russia, as a result. Well, it was actually as a result of the Star Wars program, the Russian version of the Star Wars program. It was basically taking a laser and recreating creating a fracture inside a solid piece of transparent material. We call that glass out there. I took that and turned it into art, just simply by using a version of dot matrix printing out there. Some of you may remember dot matrix printers, you know, and that's what we first used when we hooked up our computers, our laptops, and so forth. And for those of you that don't, well, it's just simply all printing is done by dots. All I did was just take dots, these little fractures, and turn those into images. It was recreating actual photographs of people live right there on the spot, taking a photograph, doing some computer manipulation, giving that to the laser and recreating their photograph right in front of them along with a Disney character. Now, the telephone number at that location at Epcot Center, the last 4 digits were 8058. I opened up that location on December 19th, my dad's birthday out there. And on December 31st, my kids were young, so I certainly remember celebrating New Year's Eve there. the total sales and how I knew we had a success. The total sales we did was 8,058. The number was 8058. Unexplainable, folks. Unexplainable, experiences. They're always out there. I know that you've got things like that as well. Embrace change, folks, because progress requires change out there. Let's go take a look at the change here in the marketplace. And I hope everybody had a great and a safe weekend out there. Right now, we've got the Dow futures up about 65 points, trading out at 12,483. These are the futures contracts that we're looking at. The ES Mini's up 9.5 points, trading out at 1393 right now. NASDAQ futures up 12, out at 25.98. King dollar down 3 ticks. You've got gold up $6, silver up 6 pennies right now. Light sweet crude down 51 cents. Light sweet crude maybe getting ready to pull back. We'll take a look at the support area that it has to break through. You've got around the world, I believe the DAX was closed last night. The FTSE, though, down 27 points out here. Maybe the DAX, I don't think the DAX was open last night. Over in Asia, you had the Nikkei up 72 points. The Hang Seng down 9. The Shanghai up 37. And our call-in number, as always, is 877-927-6648. Let's go start off by taking a look at the S&P futures. We're going to start off by looking at the 10-minute contract as you are watching us on Tiger TV. Maybe you're listening in on the radio. Maybe you're listening on your mobile device at tfnn.mobi. However you're listening to us, you can always watch us on most of those devices. Just simply go to the homepage of tfnn.com. You'll see over on the right-hand side some telephones. Click on that, or some cell phones, I should say. Click on that, and you'll be able to catch this show streaming live to you. So you'll be able to see my charts. If you are driving, don't do that. Just simply go to the homepage of tfnn.com and click on Channel 9 under Tiger TV, and you'll be able to catch the archive of this show. As we take a look at the ES Mini, let's start with the 4:15 time frame on Friday, when there was the news that drove the markets was no deal was in sight out there. We had the 4 o'clock session, in essence, close out at 1396, and in a quick 15 minutes of time, traded all the way down to the session low at 415 at a price point of 1382. A fairly large, swift move down. Now, of course, as price was moving down, in fact, if we go take a look at what actually went on intraday during that trading session here, if you take a look at the 11 o'clock time frame, you had the ES Mini get up to a price point of 1411.25. As it was doing that, if you're watching on Tiger TV, it was also getting to the peak, to the overbought condition, utilizing the relative strength indicator out there. And that means, folks, when you see, if you're trying to get in on a market and you're trying to determine where it is that you should buy it, you certainly don't want to be buying it when the breathing pattern, and that's all the market is doing. Sometimes it takes deep breaths. Deep breaths in, deep breaths out. That's what we saw really coming into 415, was a big deep breath out, if you will, as it came down and hit the bottom, got to the oversold, got to extreme oversold on the intraday charts out there. Well, on the ES Mini at 1050, there was a deep breath coming in. That deep breath coming in got you into the overbought condition. That would not be where you would want to go ahead and add to a position or maybe initiate a new position. You want to wait till the market comes back to you. This is a little fishing expedition that you would be on here. As you can see, as the market was moving down, as it was letting out that breath of air, it took a while. That took from 1050 until the time frame really got into oversold territory at 3:50 in the afternoon. Well, you're not going to initiate a buy transaction there. I wouldn't think that you would, coming into a weekend. And then, of course, it had a little bit more air left in its lungs, and it just simply blew through the rest of that area, coming into that close at 4:15 to just simply close down at its session lows. It was a 1.618 expansion of swing points. The swing point is where you see a major change in trend. You can see these changes in trend in any chart time frames that you view. In this case here on the 10-minute, that change in trend, that change in breathing pattern, of course, you had in the RSI was in sold territory, was at 1240 on December the 27th out there. That's where the market went ahead and moved up, and it moved up until it got towards that overbought condition. Just simple EKG, just the simple breathing pattern inside the marketplace. If you're going to buy, you're going to want to buy when it's stretched or when it hits either the 70 or the 30 level inside these markets. Well, what did we have take place here this morning? Basically coming off, first let's come off of the lows from Friday. So you've got the ES Mini open opens up in that first session here between 6 and 6:10 in the evening. Bounces up a little bit. It's got to be able to work that off. Oversold conditions have to work that off. It's just like eating too much. Some of you may do that tonight. Could be like drinking too much. You got to work that off. Sometimes, you drink too much and it takes a little bit longer to work it off than if you just simply stop when you should stop out here. In this case here, the market, when it opened up last night, we knew that it had to work off that oversold condition and just simply continued to really, after the first pop early on, just simply traded sideways all the way down until it got back. And so if we take a look at it on the 10-minute chart at 4 a.m., so if you want to just take a look at that breathing pattern at 4 a.m., you've got the ES mini gets up to 1391.25. Of course, as it's doing that, it's making a 0.382 retracement. These are Fibonacci. These are mathematical numbers that you absolutely want to make sure that you've got as part of your toolbox that you use in order to be able to trade the markets out there. Makes that first level, because when a market makes a retracement, oftentimes, well, not oftentimes, the 0.382 level is referred to as the dead cat bounce out there. But that is just simply a first retracement level of any move out there. And when you see that take place on any chart time frame, what you can expect is some people will go ahead and get off of the elevator that they are on. In this case here, you're going to let off some passengers, and that's exactly what happened at 4 o'clock this morning. Gets up into that overbought condition. We know what? We know that it's got to work that out. How does it work that out? Either pulling back or just simply moving sideways. It pulls back into a price point here at 740 this morning. As it was pulling back there on the 10-minute chart, it was making a 0.786 retracement and a 1.618 expansion. Those are two great Fibonacci numbers coming together at the same time, just as price was moving down into what? Into the oversold area. I've got some things here on the charts here. You don't really even need to understand technical charting. If you just simply played the pinball effect here from an oversold to overbought area, you could make a fortune. You could make a fortune, folks. Just you got to make sure that you've got the right money management strategy in place. You got to make sure that you understand what candle signals are that are out there. A difference between a bullish or reversal sign coming in off the bottom, just as you want to be able to take a look at reversal signs or bearish signs off of the top out there, because that is how the bulls and bears communicate to you. That's where they tell you that the line has been drawn in the sand. We're going to take a look at some of those lines here today. Now, as we can see, coming into the time frame here of 9 a.m. this morning, as the futures were jettisoning their way up out there, what did they run into? They ran into another retracement level, because once you get to that 0.382 level, if you start to move higher, the next level is 0.618. Take a look if you're watching on my screen, coming off of the significant reversal out here. We're going to use about 150 in the afternoon on December the 28th. That was Friday out there. You can see the market making a 0.618 retracement. Doing so, getting where? Getting into the overbought condition. Giving you a little bearish engulfing here at 9:10. Now the market just needs to work that off. How's it going to work its way off? It's either going to pull back or it's going to move sideways. Now, when we get back from the break, we'll go look at the larger picture out here, because this same breathing pattern works on the daily charts as well. You just don't see the smaller breaths in and out. 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and so let's go up to another level here. We were on taking a look at the 10-minute chart on the ES Mini, so you can just kind of see the nuances between the different time frames. You want to make sure that when you're trading a time frame, you stay within that time frame. But that doesn't mean, like when you're driving around today, you're driving around tonight, that you're not using all your mirrors to look around, because, you know, it's not you that you have to worry about when you're driving. It's all of the other people around you. So you want to know whether there's cars on your left or right, whether they're coming into your blind spot or not. And what we do when we take a look at charting out here is we take a look at different time frames. So in this case here, if you were trading on a quick intraday basis, trying to scalp the market moving in both directions out there, then you would want to just step up to the 30-minute. If you're trading a 30-minute, you'd want to go down to the 10 and certainly up to maybe the 60, certainly the daily, just to get the bigger picture. And that's what we're going to do. I'm going to walk you through the bigger picture out here. As we take a look at the 30-minute chart, that's normally where we start the mornings out here at TFNN. What we can see, number one, and if you go back and listen to the archive, you'll know that I was talking about the 1 p.m. time frame, the candle that came in there on December the 27th. That is a hammer candle. Hammer candle, folks, is where you see a reversal in the marketplace. That is where the bears had control. They had control during that session. This is a 30-minute time period, so that's between 12:30 and 1 in the afternoon on December the 27th, and is where the bulls won the fight. They won the fight on that candle out there. And that price point, the low was $13.96. When you break a hammer candle, what I mean by break it, when you close below it, you can certainly intraday, in this case here on a 30-minute basis, you can you can get below it and then bounce back above. That just tells you that the bulls are there defending their position. We'll go take a look at that when we take a look at the Apple chart out here. But in this case here on a hammer candle, when you close below it, if you are long, you know the expression, you are wrong out there. That is giving us an indication to absolutely be careful, because that was broken on the futures contract between that 4 and 4:15 time frame on Friday out there. What you can see here, that's a black horizontal line going across my screen. That level, that low is 13.96. Old support becomes new resistance out there. It is really just that simple. We'll see if this is going to be a new resistance line. This is a level that was tested as we were coming on to the air at 9 o'clock this morning. It actually got up to a level of 1397.50, closed out at 1396.75, closed out just underneath the low there of 1396 out here on that hammer candle from 1 o'clock. Of course, on the intraday 10-minute chart, what we saw on the breathing pattern in the relative strength indicator out there, we saw that it got into the overbought area. On the 30-minute chart, hasn't done that yet. So it just depends on what time frame it is that you are trading out there. But you can see, and so now let's go take a look at the daily chart. So let's switch over to the S&P. This is the S&P futures. Gives you a pretty decent breadth of what's going on in the marketplace. A little bit better than the NQ or the Dow futures out here. That's why we spend more time. And as we take a look at the ES Mini here, you can see the ES Mini, as it was traveling down on Friday, came boom right into a support area. And that support area was the last time that we saw any type of bullish reversal signal on the ES Mini. Well, not the last time, but it was the most recent time on the way down. That is the candle from November 28th out there. That candle is referred to as a bull sash. There's maybe on the bullish side, there's about 5-6 candles that really act as reversals. This is one of them, actually a little bit stronger than a bullish engulfing candle out there, but relatively similar. That low is 1383 on Friday. As the S&P futures were traveling down, they got down to a low of 1382.25. Again, 1383 is the support area. The S&P futures closed out at 1386.75. Why did they do that? Well, came down and tested a support area. That now is a very key support area. That, in fact, is a swing point out there as well. If you see the ES Mini close below 1383 out there, it's giving you the signal that the ES Mini wants to travel all the way back down to at least the November 16th lows out there. That's a price point of 1340 to 1360. This area right here was busted on Friday, and that is a morning star reversal. Here is the bullish candle configuration. It's a 3-day series. It was December 13th, December the 14th, December the 17th out there. You can see that area had held all the way up until Friday. Coming into that close, you had the market moving down with some conviction out there, and you can see right now that the area of support is holding. NASDAQ futures, they may be telling a different picture. We get back, we'll go take a look at Apple. Some of the things are going to pop and drop in the marketplace. Apple right now popping a bit, closed out at 509, trading out at 510 right now. That's better than it was earlier this morning. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow down 34 points right now. S&P off 3. Composite pretty much flat. Down 80 cents. Small caps off $1. New York Stock Exchange down 10 points. We've got, let's see what's moving on, grooving out here. Popping to the upside. We've got Apple's up $5.80. Duff and Phelps. DUF is up $2.50. That's up 19%. Let's go see what is behind this move out here. We'll go take a look at that stock chart. Management buyout of Duff and Phelps. There we go. Law firm. Okay, so we know what that is all about. You've got Cliffs Natural CLF up 84%. 84 cents. I'll get my percentages and my decimals straightened out here in just a moment. Not really anything else bouncing much dollar-wise to the upside. Magellan Health to the downside off $3. That's off 6%. Watson Pharmaceuticals. WPI. I haven't looked at that stock chart for a while, so we're going to do that here this morning. That's off $3 and change. Amazon down $1.50. Occidental Petroleum down 41 cents. Chevron off 43 cents. Baidu off 79 cents. Not a lot of activity going going on here in the market. If you were listening in on the Nadex Bull Bear Binary Option Hour on Friday with Tom, myself, and Daryl Merton, one of the trade setups that I was looking at was the U.S. dollar, Japanese yen. You know, what I suggested was that we might see a reversal signal. We saw a reversal pattern, most certainly, that was setting up here on the Japanese yen. We're taking a look, if you're watching us on Tiger TV, you're taking a look at a butterfly sell pattern. This is a 1.272. That's an expansion of swing points. If you want to know what that is, you already know what a swing point is. And we're taking a look at the major swing points. That's where you see a significant reversal, significant change in trend in the marketplace. In that case here, if you were taking a look at the currency pair, you would be looking at the March 15th date. If you write this down on a piece of paper, $84.17. That's the high. You would come all the way down to the low where you see a significant change in trend. That would be September 13th. That low out there, $77.12. Subtract those two, multiply that times 1.272, and add that number to this low of $77.12. That'll take you all the way up into probably about the 88 to 30 range out there. That is how, if you don't have this tool and you don't have a Fibonacci expansion or contraction tool on your system, you still can go ahead and identify retracements and expansions of swing points out there. It is nothing but math. It's easy math. It's 0.382, 0.618, 0.786, 1.272 on the expansion side, 1.618, 2.618, and pi. Good old American apple pie out there, 3.14. Now, we did get, you have that as a reversal pattern out there. You got to wait for a signal. Well, you got the signal on Friday. You got a shooting star. There's going to be shooting stars this evening out here, but you got a shooting star on Friday, but today you're not getting any follow through. So is this a short position? Absolutely not. You got to wait for the signals out there, and you have not received that here just yet. That is on the U.S. dollar, Japanese yen. Let's go take a look at Apple. It's up $7 and change. I'm sure on very light volume out there. Don't get sucked into this here just yet. Wait for some better indications. Now, if we do take a look at Apple out here, Apple's got some very good support down at here's the hammer candle. That is the November 16th low. That is 505.75. That qualifies as a hammer candle. You got a bullish engulfing candle that took place on December 17th. The bulls showing up there, defending their territory. Price, the bears were able to drive it down to 501.23. Still closed out the day at 518 as it pushed higher. Then 2 trading sessions ago on Thursday, another hammer candle that was out there. Volume as it was moving down was lighter as it got down to 504.66 out there. You can see price here, not price, but as far as relative strength, traveling down near the oversold areas. And right now you're just seeing a little bit of a bounce. Let's go take a look at Apple. Let's put this on a shorter term time frame out here. Let's put it on the 5-minute time frame since we've been trading for 8 minutes here. And Apple's got, you can see, let me just refresh my chart. Let me make sure I've got all the data before we actually start giving out any numbers or swing points or anything. So we'll just update this. There we go. Just takes a moment. There we go. So now if we take a look at Apple, one good piece of information is that it is trading above this high volume swing point. This was at the open at 9:35 on December 21st. The gap out here, which really has been filled. I'm not going to use that, but from a volume standpoint, volume is, you had 4 million shares to the downside so far on this bounce here this morning. It's been up on 796,000 shares. Not really a lot behind the move. If you take a look at Apple, Apple works the same way. So this is a 5-minute chart. We've got the breathing pattern. We've got our thresholds of the relative strength, high and low. You can see Apple as it makes its bounce here this morning, moving into that oversold condition out there. So at some point in time, we'll see a retracement on Apple here, but already on the intraday chart, just on the 5-minute, just a simple breathing pattern out there that goes on inside these marketplaces on a continuous basis out here. Let's go take a look at some of these other stocks here that are popping and dropping. Let's go take a look at Watson Pharmaceuticals. That is the leader in the clubhouse on the way down. WPI is the ticker symbol, gapping down this morning. Let's go see if there is some news behind it, because this has been a nice performer out here, and we'll see if we're going to see some signs of weakness, some type of selling here today. So I see nothing in the news behind this move. Down $2.91. Volume so far in 10 minutes of trading, 306,000 shares. This looks like it's going to make its way back into the swing point of November 15th. Now, this has been a strong performer. So as we take a look at stocks that have strength out there, Watson Pharmaceuticals absolutely qualifies as one of those. However, it looks like this is going to be moving down into the November 16th swing point here with volume. That swing point, again, only has 1.1 million shares. The top of it is 83.60. It has gotten down to a low of 84.88 so far this morning, but 307,000 shares behind the move. You know, that certainly would have enough volume, more than 1.1 million shares by the end of the day. We'll see what kind of selling pressure. Now, this does have some decent support. You can see it was where it last broke out. Watson Pharmaceuticals broke out most recently on the day of August 24th. Does that with 3 million shares. So let's go ahead and draw the line across the top and bottom of that swing point. We'll go ahead and use the black color out there to draw that line a little bit easier for you to see on the screen. You can see the last time that Watson Pharmaceuticals came back there, which was in that November 16th level, was coming back on lighter volume. As an example, November 14th, 773,000 shares to the downside, and on November 15th, 1.1 million shares, so not enough to break down the 3 million shares. So today is going to be important identifier as to what Watson Pharmaceuticals is doing, because if it's coming in with more than 3 million shares, especially on a New Year's Eve Friday, last day of the trading season of 2012 out here, that would be giving you your first indication inside Watson Pharmaceuticals of actually institutional selling out here. So this could be, maybe this is tax selling that's actually going on, because if you take a look at this chart here, this has been a nice performing, coming off of the lows back in 2009, 2008. Watson Pharmaceuticals was down around 23 bucks, now up at $86.13. So that is about a four-bagger out there, not a complete 400% move, but pretty darn close to it. And all the way up here, not really seeing much in the way of institutional selling. The first sign of it, the only sign of it really that I see was, well, the two signs. Either January 17th moved down with about 9 million shares, almost made an island reversal candle on January 24th with another 9 million shares, but it did have a real nice sign of strength here on the, let's see here, March 21st, 10 million shares to the upside, then really never looked back. Had the second sign of strength, which is nice on Watson Pharmaceuticals, which was April 26th out there. That gapped up with 10 million shares, and it came back into that gap, filled that gap, came back down with about 1 million shares. Now that's a beauty. So it comes back with 1 million shares, hovers around that area. It looks like it got up to about 2 million shares. No way was that going to bust its way down. I'll draw the line across the swing point here. Of course, when you're coming back to a breakout area, what you really want to be paying attention to is the lowest volume day prior to the breakup. But let's go ahead and use the April 25th candle. We'll go ahead this time. We'll use red line to draw that across. As you take a look at the chart on WPI, you can see, and I'll go ahead and put the volume identifier on here. So this was a nice breakout. You want to learn to buy breakouts. That means you don't have to jump on board. You can wait for it to come back. You want to see it come back and do it on later volume. And then, just like a race car driver, you want to draft right behind it. You want to go ahead and take your position. And in this case here, it came back beautifully, coming back on light volume, and then boom, took off. And, so now you're seeing a little bit of institutional selling. We'll see where this closes out the day. Let's go take a look at Magellan. Magellan seems to have lost its it's traveling to the north. Let's go take a look and see what this stock chart is actually doing. MGLN, because Magellan here off about 3.5% this morning, down just $1.83 off of its session lows. But let's go take a look at, let's look at this stock chart. This is an interesting looking stock chart. Take a look at this. This does have volume off of the highs here, so that is not a good thing. We're taking a look at the July 31st candle. This should not have happened. So here's a stock coming back to a breakout area with volume. And when I'm talking about, folks, if you're in your car listening, or you're listening on one of the mobile devices or your radio, this stock here broke out on July 19th. Nice breakout, nice sign of strength. Does 3 3 million shares to the upside. And as far as candles go, pretty much a type 1.5, type 2 strong candle. You had wide price spread, accelerated volume on the way up as it broke out. Goes ahead and has some nice follow through on July 23rd. Actually does shares, 2.7 million shares. Makes it up to a high on July 27th, out to 56.58. Does that on 926,000 shares. No big deal. Not necessarily light volume. Still pretty good volume, quite frankly, as you take a look back along the left-hand side of the screen out there. So even as it's making a high, had some nice volume. But something happened. The air came out of the tires on this thing on July 31st, and as it was coming back to the breakout area. Now remember, the breakout area on this, if I didn't give it to you, was to the low of July 19th, and that's in the $46 area. As this thing comes back in one day, gets down to a low of 46.75, does it with 3.4 million shares. Coming back, way too hot, unlike WPI, unlike Watson Pharmaceutical. So here's a difference. So here's a New Year's gift for you. Go study these two charts, because what Magellan, MGLN, teaches you is how not to buy this breakout here. Not that this may not be a good equity, but this is not the type of breakout that you want to buy. Instead, go back and take a look at that Watson Pharmaceutical chart. That is how you want to buy a breakout. Now, for those of you that like to short stocks, just take that chart, print it out, and turn it around. Because the same thing, when you see a stock break down, you want to wait for it to come back to the area where it broke down, and that is where your best chance of being able to put in a buy is. Let's go just simply on this stock chart here. Let's take a look at the daily relative strength. You can see also as it was making its move higher, it was getting into those extreme overbought conditions. When you get into extreme overbought conditions, you want to make sure that you've got a tight stop, or just simply learn to take your profits off the table. If you look at this stock here in Magellan, take a look at as it was traveling down around the lows out here. In fact, this actually had a nice divergent sign out here to come into this equity as it was getting down into the oversold territory. It was doing that because it continued to make lower lows, but on the relative strength, it actually was rising out there. That is a beautiful divergent pattern as well. And so in this case here, you can see still coming off of these lows from the oversold areas. You're in the 41 buck range. You didn't get into really into the overbought area until the first bearish sign really was up here in that. In this case here, you might have been trapped. So you really, as you get into the extreme area, which you did on July 20th, that is just a sign of an accident waiting to happen out there, and you just don't know how deep that pullback is going to be. So, pay attention to this on any of the stocks that you hold, because it absolutely is always giving you incredible information out there. These markets are not difficult to trade. Making money is not a difficult thing to do. It's all about the emotion. It is all about your emotions. You get rid of those emotions out there, which is and you just simply trade the patterns. You just simply have a set of rules that are written down. This game is just about making money. This is not trying to buy the bottom tick. That's why you use wide stops. That means that from a money management standpoint, you have fewer shares out there. I teach that to you. I teach that. In fact, if you sign up for my newsletter service, it comes with a number of different things out there. In fact, during the next hour, we'll go take a look at that. But one of those things, one of the key things, is money management, knowing how many shares to buy and knowing how to use stops properly out there. And you want to make sure you're using something called the average true range. You can mathematically calculate this yourself by taking a look at the last 10 days, high to low. Make sure you account for gaps out there, divide it by 10, and make sure your stop is at least outside of that area. Make sure it is outside of the average true range. Otherwise, you're saying that you know where the bulls and the bears are going to stop their trading out there. And we don't know that. What we do know is if we stay outside of average, we'll be extraordinary. And that's what I want you to be, is extraordinary out there. 877-927-6648. Dow's off 17. S&P is flat. Composites up 7, of course, driven by Apple. Up $8 right now. Small caps slightly negative. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Remember, progress requires change, and I want you to embrace change out there. I want you to eliminate the phrase, this is not the time for change, because that phrase, folks, that is like saying this is not the time for new blessings to come into your life, and you want to make sure that you've got that occurring on a continuous basis. Growth, folks, it is a must It's a must physically. It's a must mentally. It's a must spiritually out there. The time, folks, is now to break your shell. I talked earlier about the seed, moving into being planted in the soil of darkness, and just simply, a seed. In order for a plant to grow, a tree to grow, it's got to break through that shell. That's what each of us have to do. Sometimes a little uncomfortable, sometimes a little difficult to break that shell. But New Year's Eve, and that's what it is today. New Year's Eve is a great time to break your shell. Face adversity with courage. Brace adversity, as it will be rich with education. It'll be a rich educational gift out there. Adversity, let that be your milestone for growth. Find it in your heart to welcome change, folks. Change is always around us. Pythagoras, he once wrote this. He said, "No man is free who cannot command himself. Action and reaction, ebb and flow." That's what we see in these markets. It's happening around us all the time. Trial and error. Use some of these techniques out here that we teach you. Progress, folks, it requires change. And I just simply want to say that I thank each of you for allowing me to make extraordinary progress in 2012. And the best, folks, in 2013 is yet to come. So have a happy New Year out there. As we come back to these markets, really relatively unchanged. Dow's off about 13 points right now. Let's go take a look at gold. In fact, one of the things I'm going to do is I'm going to share with you during the next hour, I'm going to share with you some of my newsletter. I'm going to teach you something about the VIX index that probably nobody has ever taught you before. So I'm going to teach you a lesson that's going to be important. So I'm going to share with you a gift today. It probably will change the way that you trade when you take a look at high volatile days out there. It'll be another indicator to help you understand maybe where a bounce is coming from. So my newsletter is like about 40 or 50 pages. I'll show you some things in there. I don't often do this. In fact, I rarely do this. Show you what is inside the science because it's a newsletter that contains a ton of information out there that is valuable, so valuable for your trading. But I'll share with you actually what has been the best reversal signal for 2012 in the marketplace. And it hasn't been the new moons or full moons. It has been something else out there. So we'll take a look at that during the next show out there. Of course, if you are starting your day, be safe. And you can always catch the archive of the 10 o'clock show on Channel 10 on TigerTV. As we take a look at gold here, we've got gold trading out at 1664. Basically another flat day out here. We can see gold has been traveling in this little sideways range here. We know that gold got down into the oversold condition on December 20th. You can see you've got this lagging indicator. This is the 20-day and 50-day exponential moving averages. You had a cross through on this thing, meaning the 20-day cross through the 20-50 day. That's a bearish sign out here. The mere fact that it's just moving sideways, as you know, that when you get into oversold territory, you're either going to make a bounce by retracing. In this case here, it could have done that, even come up and hit those moving averages, or you're just simply going to start moving sideways. This here, what is very bearish, is the mere fact that gold cannot even break the candle, the body of the candle from December 20th out there. Something to think about. If we take a look at silver, you'll see silver actually weaker than gold. Take a look, if we go back and forth, just take a look at gold here. At least it's made it up towards the top of that candle. Take a look at silver, the same candle we're talking about December 20th. Silver, from a body standpoint, he hasn't even gotten to 50% of that level. Stay tuned, folks. The Money Masters show is up next. Have a happy New Year. Be safe out there. Again, no drinking and driving. Walk or take a cab. I'll see you next year or see you during the next show. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today. because your journey to extraordinary rewards is just one click away.